All right. Good morning, everybody. Welcome to another jam-packed edition of Top Trades Live. I'm here with Enrique. Enrique, how's it going?
Going good, going good. It's
Back on the East Coast.
back to chilly Connecticut, which I don't mind this right now. It's like 35 to 50,
Yeah.
but I can feel the suck coming because I get out in the morning, I open my garage, I'm like, oh yeah, right, winter.
This is the best
Um,
time of year. I agree with you. I like 40s, 50s. Can't beat it.
if the lows were maybe 10 or 20 degrees higher, I'd probably agree with you. It's fine. It's fine. We still got 60% of the leaves up, so I didn't miss that on my long 2 week, 3 week trip. So happy about that.
Well, we got a lot to cover this week. Not only is it fall and getting cooler, it feels like the market's just ready to take off and get even hotter. We have Mag 7 earnings in play this week, starting tomorrow afternoon, and it feels like everybody's eyes are going to be on those. What is tomorrow? I think it's Microsoft, Meta, Google tomorrow after the bell, or is it Microsoft, Meta, Amazon? There's three of them
Mm,
tomorrow, I think, coming up.
Amazon and I just remember it was the A's on Thursday. So Amazon and Apple are on Thursday. You're right. Microsoft, Meta, Google. Tesla, by the way, reported last week. I didn't know if you know that, Greg.
I,
Um,
you know, I I miss for some reason I missed that one. But yes,
internal joke. Greg was like, "Oh, Tesla's going to have an interesting report this week," and then this morning is like, "Oh, I
wait a
guess they had
second.
an interesting report last week."
I guess it happened last week.
Yeah.
Yeah. So we got that. We have a Fed day tomorrow and a 25 basis point cut coming down the pike here, which everyone is expecting. And then we also have Bassett dropping some interesting tidbits over the weekend, basically saying that, like, yeah, Trump knows what he's doing and was just joking around with you guys back in April, and he always meant to, throw those super high tariff numbers out there. He wanted to spook the market and all that stuff. And we have Trump going to what is it, South Korea to meet with Xi, and
He's
so
he's do, he's doing all of Asia before trying to cut as many deals before he sits down with China. Is
yeah,
what he's doing.
cutting all the
Uh,
deals and then doing the big deal on Thursday, maybe. And I'm sure the market's going to be looking toward that. So we have all of that. And then on top of that, we have seasonality starting to kick in right here. This is the spot where the market tends to ramp up into the end of the year. And I know you have a bunch of info on that one. So if you want to just start rip it into that, take it away.
yes. So we were talking about. I think we're in a really interesting combination of seasonality and situationality. And seasonality is the idea that the markets tend to have will have tendencies at certain times a year. And I think I've discussed this with on these calls, but it happens because of the way many managers are compensated and a number of factors. But these are very strong factors. It's like the seasons, to be honest. Like it's more likely to be cold during winter. It may not. Maybe the seasons are more stronger than seasonality, but seasonality is pretty strong. And then what I call situationality, which is often in the markets, if you see, A, B, C, D happen, the likelihood of F goes up a lot. And we're actually seeing an intersection of these two things that all argue for a very bullish finish. And let me I'm going to give you a ton of data. This data, by the way, is both, I think, all on the Paradigm daily feed. If you guys haven't downloaded the application yet, I encourage you to do so. Or it's also on my Twitter feed. So I updated it there. But some of these are kind of random, but they're not. Number one, the bottom in the market for the seasonality was yesterday, and we go up from here over 75 years of data. Number two, and I don't think it's going to happen today, but typically the best day of the year in the stock market, the single best on average over 75 years is today.
Wow.
Strangely enough, I don't think it's going to be a big day. The market seems pretty chill.
Yeah.
But number three, when we have the S&P is up, I'm reading these off my Twitter here. When the S&P is up 15% at the end of October, in the last 50 years, we have only had one out of 21 times So that's 95.2% of the time, one time where the S&P has been down. Okay. And by the way, it was down 0.7%. So what that means is when the market's up a lot going into November, there's a 95% chance it's up. And the one time it was down, it wasn't down at all. But there's even some more powerful ones. Let me just go here. There is these ones get a little bit funkier. Is when the market is up 6 months in a row, which we're just about to complete October. Like we're up 2.5%.
That'll be six, right?
Yeah, first these 6 months going into November. This has only happened 3 times ever in 75 years. It's quite a streak. And all 3 times the market was higher and it was up an average of 6%. So, the seasonality is what's happening with the, just the normal seasonality. Q4 always tends to be stronger, especially once we get through October 27th, yesterday. But the situationality is when you combine how much we are up and how we got here, meaning that it hasn't been choppy. It's been boom, 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 boom. We're going to be up. We're going to be up. And we may be up a little. We may be up a lot. My personal view is, given the types of speculative flurries that we've seen. We talked about Beyond last week, and I can comment on Beyond. I'm sure we've talked ad nauseum about, SMR and quantum and all these other things. I think that I would take the over on what the market can be up. And so I think many of you know, I have this, what I call the tactical trading account, just my retirement account. And I swing it around massively, 50, 60% of a portfolio being something. I was actually short the NASDAQ back in July via SQQQ. And I got my A handed to me. Like I got hit pretty hard. I'm still up on the account over the period because of my good stock picking. I just covered everything yesterday.
Yeah.
And the reason is, part of me wants to sit there and say, oh, well, the government shut down and the market's been up so much, and, China and Russia and all that. And the thing is, if I have all of that going with me in an overbought situation and with seasonality on my side, which I did in July, I'm willing to take the bet. Now we're not as overbought. The market, as we've talked about on these calls, has basically not done a whole lot, especially on an equal weighted basis, since July.
Yeah.
And I'm going into the most powerful seasonality period of the year. So I'm not going to go out in my shorts. I'm not going to go for a trip to Antarctica in December or February and just pack shorts. That's stupid. Right. And so for me, I say shorts here because I was, technically short the market. I like it. And so I think we've got a really awesome sweet spot here for the next 2 months to take some of those gains that you made this year. And I think a bunch of you are up a lot. Make sure you've booked a ton of profits, but then, as the kids say, go YOLO, on some stuff. YOLO, for those of you who don't know, is you only live once. And I think we're going to see some really, really attractive YOLO type setups. We talked about Beyond, which I'm sure people are asking about. I have the chat open right now. But I'm as bullish as I've been all year right now. And and then someone was asking about the 98 to 2000 charts. I mean, I would point out, see if you can pull it up, Gunnar, the NASDAQ composite in late 99 the NASDAQ composite, I want to say, was, I don't know, flattish from January to October, the end of October 99, and was up 80% in the final 2 months. 80% on the NASDAQ. That's not a stock. That's the entire thing. So do I think we're going to see that? No, I doubt I'll ever see that again in I got 30 good years left in me. I doubt I'll see it the rest of my lifetime. But, can we see, is that kind of what we're setting up for? I was actually on a call with Patrick Bouvet yesterday, and I said, I was there. I remember trading late 99 this is the single moment in time where I see the highest likelihood of seeing something similar that I've ever seen in my 30-year career. So what does that mean? Ultimately, it means I think we have a good finish to the year. Is that a little good finish? Is that a lot good finish? I don't know, but I think it's time to take some shots and layer on some risk.
Yeah, definitely. And you're a lot more careful with certain language than I am. I talk about melt ups a lot, but I remember you saying like maybe a week or two ago when you were talking about melt ups, you say there's been one big melt up and that was 99. And that was a true melt up move. And we haven't really seen anything since then that can really compare to it. So I just wanted to point that one out.
Yeah. Look, I think there are melty ups.
Yeah.
I think 2020 had a melty up.
Yes, absolutely.
Where we can get and look, I give you the averages. When you're up 15%, the average is up 5. These 3 instances where we were up 6 months in a row, the average is up 6. That's on the S&P. I don't have the NASDAQ averages, but probably good rule of thumb is 1.5, 1.5 times. So, 5 to 10%. I think, up 5 on the S&P and up 5 to 10 on the NASDAQ is completely believable.
Yeah.
And I feel like it's building. There's this little storm building. And if we get what you said, we got rate cuts, I know it sounds like it will never happen again, but what happens if they cut a deal and the government opens? Because I want to go into this for 1 second here, because what's happening right now is, I'm not trying to make this political. The Republicans are saying, let's just do exactly what we were doing before in terms of payments, and we'll figure it out later in November. And the Democrats are saying, so that means turning those subsidies back on, those Medicare subsidies that they're complaining about. Yeah. The Democrats are saying, no, we won't turn the Medicare subsidies back on, because if we turn them on now and do this deal for the next 6 weeks, we'll only turn them back on if we know we're turning them back on for 3 years. So they're starting to lose this battle, because the Republicans are like, hey, you want your Medicare subsidies and your food stamps? You can have them tomorrow. We just approved a bill that will do that. And so I understand what the Dems were doing, but they didn't have much to work with. And so now they're kind of in this tricky spot of like, what do you do? So I think it's actually, I'm going to go against consensus. I was strongly for we were going to have, a long shutdown, perhaps the longest. I don't know. I'm pulling back on that. I see it. You guys know I read tons. I absorb a ton of media. They're starting to lose the battle. And this isn't political. I don't really care who wins. Honestly, I don't care if the government opens back up again too. But you get rate cuts, you get trade deals, you get great seasonality, you got situationality, you get the government opening again. Why not? S&P 7, Dow 50,000, comp 25,000, S&P 7,000. You get a lot of round numbers. I think people could get pumped. And so I think it's a very exciting opportunity right now.
Yeah, definitely. I mean, I feel the same way. And that's why I'm looking, very hard at crypto, at small caps, at biotechs, and all of these smaller, more explosive plays that, if the market's up 6-7% from here on out, those are just going to be screaming higher. And it's going to be, some of the best places to be parking your trading money.
Without talking about a meme stock, like something that can go like Beyond did from 2 to 7 in a day, I think that's right. You should be looking for things that if the market's up 5 to 10 across the S&P and NASDAQ, they can be up 15, 20, 30, and the options can double, triple, quadruple.
Yeah, absolutely. I wanted to go back to meme stocks because I talked about this a little bit last week. You mentioned Beyond right when it was first starting to move higher. I think it was up like what? It was up like 60% on the day when you started.
So on that day, when I was talking about it, it was I looked at the time. It was at about $2.15, and anyone who bought on the call at $2.15 had 48 hours to sell it at a 20 to whatever 200% return.
Yeah.
And let me I want to say something because I want to talk about that for a second.
Mm-hmm.
That wasn't an official pick, okay, but it was something that I saw developing and I thought it would be useful to share. But when I share these, because I had this with Open before too, let me tell you what you always, always, always should do. If you make a double in, I don't care if you make it in 10 minutes or in 10 days, book 60% instantly. Yeah. Always, always. And then let the rest ride. Because if you did that here, you know, by the way, you're still sitting on whatever, I don't know, 40, 50, 60% return. So because it's not an official pick, we're not going to be publishing on it saying, oh, you know, Beyond, you should be selling the next day. But I don't need to. The rules are always the same. If you make you make 100% on a meme stock in 10 minutes to 10 days, always sell 60%. You could sell, I say 60 because then you lock in a 20% return, right? You know, but and it's still, I'm very intrigued by Beyond still. I feel like with the frothy environment, both Beyond and Open, to be honest, I feel like they've picked up the GameStop meme.
Open looks really good. Open looks like
they've picked up the GameStop meme baton. And as we go into what I think could be an explosive market, you know, there's no reason Beyond can't be back at 5 in a hot second. And there's no reason that Open couldn't be back at 15, you know, 20. I just don't know. But again, what I'm saying, what I was starting with is like, I think there's a role to play these. Just play them small, right? You know, take a very small portion of your profits and you know, play these. But and then they fit very well with option strategies. Because the nice thing about the option strategy too, you buy out of the money options and you take, I don't know, 1,000 of your $100,000 in it. You got to make your own decisions. You know what? You lose $1,000. That's 1%. Like, you know, you got other things that are going to move. Like Talon, I'd have a 50% position. I mean, Talon, I'd be getting, you know, crushed there. We can talk about Talon. But I think you just have to size it right. But I like meme optionality into these last 2 months.
Now, just talking a little bit more about strategy with something like Beyond, when you have these monster moves on the daily, I think this is, and you can tell me if you agree with this or not, I think this is the type of play where it's really tough to say like, oh, I'll buy it if it breaks above this price or that price. It's more of just a, like you said, a pure YOLO where it's like, I know this is getting more attention. I see it's kind of consolidating here. I'll throw a small amount at it in calls or however you want to do it, you know, with the intention of losing it all if it doesn't work out. Just sort of going with the flow from there.
You know, Open's trading a little bit more with now Open has established a bit of a pattern.
It looks like a real stock. Beyond
it looks like a real stock. Beyond doesn't. No, I think, you know, look at this way. Like I'll say this. You know, I'll give an analogy. We are it'll be a little inverse analogy to be honest, but this is a hurricane of opportunity, right? We're the storm where the world's crazy, okay? And actually, I don't know if this is true, if there's a lot of lightning and hurricanes, but here's my point is when it's sunny out, there's no chance that lightning's going to strike. But when there's crazy storms and tornadoes, there's a chance that lightning strikes. So buying some calls and Beyond in a very small size is sort of saying, we're right now in a world where lightning can strike. And if lightning strikes, I'm going to make 5 to 10 times my money. Because most of the time, we're not in a world where lightning's going off. Right now, we are. And especially for the next 2 months. So that's kind of where I'm coming from. You know, but it's Beyond does not have a technical setup. The only technical setup I can tell you for Beyond, I will say 2 things, is that the stock has thrust higher twice in the last 4 months, once in July and then once just recently. And there's a lot of people who made a bunch of money, a lot of people who lost a bunch of money, but people at least go and say, oh, it's got a chance to go meme stock because it just did. Versus something else where I kind of like going to the next meme stock. You know, people say, well, the next meme stock is, I don't know, I don't have a candidate right now, but I'd rather take the last one after it's consolidated
Yeah.
and then do something there. I mean, let's pull up actually, so let's pull up a favorite that we've talked about a lot. We'll pull up USAR.
Yep.
Okay. So you all know that we've been all over these throughout Paradigm. I beginning in Nashville was very cautious USAR. I was just like, yeah, I don't know. It's gotten too crazy. I'm getting real interested in USAR again. So, and what's my thought process? Well, we're back on the 50-day moving average. And I know this is something where people can lose their minds. If USAR announces a deal with the government, could it go to 45, 60? Sure. But I'm not saying that in a vacuum. I'm not saying that in a, just 45 is the number I picked. I'm saying it because, by the way, it was at 45 4 weeks ago.
Yeah.
And we don't have we have long-term open recommendations in USAR. We don't have a short-term one, but you get the point. I guess my point is there's a little bit of, when you're trading these meme stocks or things that have this speculative capacity or potential, there's a little bit of a short-term echo trade in it, right? What I want to look for is, has it already shown that it can go bat-esque crazy? Yep. Because then it's more likely, the things that are more likely to be like, holy cow, that just went ridiculously crazy, are the things that you already said that in the last 6 months. If it hasn't done it, I'd rather, because there's 20 of them, there's 30 of them, there's 50 of them. So why don't we play those in the highly speculative environment than going and trying to find the next one that no one's discovered yet? Because why have you discovered it and no one else? I mean, maybe you'll be right,
Right. But yeah, there's positive vibes around them. I mean, like, people know that this stock can go from $14 to $40 because it did.
Exactly. It's a statement of fact that it can, because it literally did. I mean, I guess it's a statement of fact that any stock can, but again, I'd rather, it's like my team can win the Super Bowl. Well, if they haven't won one in 20 years, I don't know. But if they won last year, I'm like, okay, it makes a lot of sense.
Yeah, but also, I mean, just taking all that away and just purely looking at the chart right here, we have this huge parabolic move that's been bled off, and now we're right down here, right by those highs from March, before the big drop before earnings right there. I guess that was maybe pre-tariff tantrum right there. But so all of this chop isn't in play yet. If it bounces here and stays in this range and doesn't eat down into this big choppy base right here, then I think it has even more of a chance.
Look how it's traded on the 50-day moving average, by the way, since right there. Summer. Since the MP deal happened. Okay, because that was the catalyst for this whole group. Since the MP deal happened, it's traded on, just buying at the 50-day has been a super smart. Now, do I love that here? I don't know. I like it a lot.
I want to see a bounce before I declare.
Yeah, see, and I'm a little different. It's like, I just feel we went up so much from the 50-day. When you extend that much from the 50-day, I usually kind of expect you to go below the 50-day for the short, for a little bit, just because it's just, you got to unwind that. But so let's do. I want to do this real quick because everyone's asking. So let's talk about Talon, because I gave it as a free pick. And just so you know, folks, we have long-term buys in a couple publications and breaking profits on Talon and USAR. But last week, you weren't on the call, on the Maverick call, obviously, Greg, but I basically got up on the call and was like, I said buy Talon a dozen times.
Right.
See that little spike down? So we
it was down here. It was right at the 100 now.
It was the stock was actually traded at 370 the entire call. So I think a bunch of people bought it and calls. And what do I think of Talon? I love Talon. I would buy it again. We're getting another bite at the apple. I'll say a couple things. So why is the stock down today? Ostensibly, Cameco, which is the leading uranium producer in the West, they signed a deal. See Cameco, how much it's up today.
Yeah. They
signed a deal with Brookfield, which is the big real estate development company, where they said that Brookfield was going to deploy, let me just get, I I don't know, $80 billion.
Yep.
United States signs $80 billion nuclear deal with Westinghouse, Cameco, and Brookfield. Okay. So Brookfield is the real estate development company, and that's basically what they do. Cameco is the one who'll provide the uranium. Who cares? It's not it's the least important part.
Right.
And Westinghouse is the one that provides the reactors. So what's happened, Brookfield's moving a little bit. Cameco is moving some. I forget who owns Westinghouse. I should know that.
I don't know.
Yeah, I don't. Who owns Westinghouse? But so we're seeing the IPPs, which are Talon, Constellation, and Westinghouse. I didn't know this. Westinghouse is actually owned by Brookfield.
Oh.
I didn't realize that Brookfield and their private equity had bought Westinghouse. Okay. So what just happened? The US government signed an $80 billion deal with the largest manufacturer of nuclear reactors and the person who'll supply all the uranium. So the current operators are down because people are saying, oh, there are going to be a lot more nukes built. It's going to be bad for these guys. It's the most ridiculous thing you could ever imagine. Let me give you some math. $80 billion builds you about 4 nukes at the most recent prices. So that's not a lot of capacity. Number 2, that capacity from a cold start ain't coming on for a decade.
Right. Yeah.
Okay. But number 3, and now I'm really going to blow your mind, I can tell you where almost every single nuke that will be built in the next 30 years will be built. I could pull up a map and I could show you to the kilometer where they're going to be built. And you're like, how can you do that? That sounds impossible. The reason is the only place it makes sense to build new nukes is next to old nukes, because they've got water, they've got safety, they've got environmental, they've been vetted, they've got pipes. So the person who actually benefits are the people who own the most nukes. Who owns the most nukes? Constellation, Vistra, and Talon. So this is just a perfect example of the market. And so someone said, I think it's actually one of our subscribers hit me up on Twitter and said, oh, Talon's trading really choppy. Does that worry you? No, this is what happens after you've lived above the 50-day moving average. Look at that, how far we've been above the 50-day moving average. Since they announced that acquisition in July, we were above the 50-day moving average for 4 months, 3 months. So you tend to break out of that very steady pattern with a little bit of violence. I love it. I'm not going to say buy Talon a dozen times on this call. I probably should. But I'll tell you what, tomorrow, if it's down or if it's even where it is, I think this is a 400 to 450 stock by year end. I mean, it was 405 this morning. So I think it's a 450 stock by year end. And I think in a year it's 600. Buy Talon. Buy options, buy the stock, and the options I'm not going to get into picking options on an informal whatchamacallit pick. We've got some options in the Maverick that have been identified.
So are you saying that you like the stock?
Yes, buy Talon. So we should. Nick, is there a way we can just pin? Because if anyone else that comes on and asks, just pin buy Talon.
What does that Nick tell them?
People get on late on the call. They'll be like, "What should I do with Talon?" Buy. But this is great. So what's happening? I'll tell you. This is going to be some really deep stuff here, folks. The market's been consolidating since July.
Yeah.
And volatility has been moving up underneath, but is visual, like sort of optically has been compressed. I love that we're starting to see some real pin action in stocks, like these big crazy moves. I actually think that means we're more likely to break out to the upside than not. Like, I get creeped out when everything just grinds higher, goes up every day a little bit, and nothing kind of moves. It just, that to me is very, like, that bothers me. This, a little bit of violence, seasonality. Yeah, I love Talon. I don't tend to buy or own stocks that I recommend, just as a rule of course. But if I wasn't doing this, I'd have 50% of my portfolio in Talon, my long-term portfolio. 50. I've
Yeah.
said that many times.
Yeah. Yeah. Um, so we're talking a little bit about big winners this year, speaking of talent, which has been a big winner this year. One of the things I like to do leading into melt up season is to find those stocks that did really well, but have been marking time in a very constructive way since maybe late summer. Because I feel like those are the ones that have the best shot at having a big positive earnings move. Those are the ones that have the best shot at catching and moving higher double digits by the end of December, because again, it comes down to that muscle memory of investors know they're proven winners. They're consolidating here, and we're getting to this point, like you said, in seasonality where we're about to take off right here. And I feel like there's just so many out there, and I'm starting to build my lists of these names that are building. And one of them, which I mentioned to you, Roblox, which I think is a very interesting play here coming up into earnings, because this stock had such an incredible move from the April lows, from $50 all the way to what, the 130s here before it flamed out with this giant candle that's still floating out here in the middle of the air, like it has some sort of magic in it. But it's marked time really well since then, since this blow off top at the end of July right here, and now we're coming up on earnings. The thing that impresses me most with this is that Roblox has all kinds of bad news thrown at it, and it seems to be pretty bulletproof when it comes to
I don't know that it actually has bad news. It has bad vibes thrown at it.
That's
because none of this, bad publicity. Actually, that's the word.
That's the word.
Is like because there's actually been no news. Their numbers are great.
Numbers are great.
And nothing's ever there's never been a pedophilia ring of 32 people has been convicted because they were using Roblox. Not a single conviction. Like not even a conviction. There's never been a trial or an accusation. Yeah. It's just S-talkers on the internet like to go after Roblox.
Negative scuttlebutt. How about that?
Yeah, it's just bad publicity, is what I think I'd say.
But it's been able to chew through all of that really well, and now it seems to be coming toward the apex of this coil right here, right as earnings are about to hit on Thursday morning. So something like this really interests me, and I feel like I'm not really an earnings bet guy, but if you're in the market for earnings bets like this, I'm looking for stuff like this.
So I like this one a lot. The only thing I don't like about Roblox is their actual earnings reports. Like I was looking at the data because you mentioned this morning.
Yeah.
Last one they technically missed on EPS, but let me look at the revenue. So last one they technically missed on revenue and guided down on revenue. The one before they beat a little bit but guided down on revenue, and the one before they missed on revenue and guided down on revenue. Now, the last report, the stock was up 11. The one in between it was flat. The one before it was down 11. Yeah. I guess my point is I actually love the Roblox idea into year end. I love your thesis.
Yeah.
But in this case, I'm like the earnings report probably concerns me a little bit, as opposed to excites me. A mild concern. But everything else you said, I think is absolutely right. Because the other thing too here, let's go back to this. This is a little bit more of a traditional framework. People want to show winners, the money managers. Like window dressing is actually here's the thing. I don't know if window dressing, this is when a manager will at the end of the year buy a bunch of stuff that's up so he can say, hey, we owned Roblox. It was up 72% this year, whether he had actually owned it to make 72% or not. I don't know if that's actually how it happens, but I will tell you this. The stocks that are up a lot tend to go up a lot more at the end of the year, and the stocks that are down a lot tend to go down at the end of the year, which is tax loss selling. Yeah. So as a general rule, what would I not buy right now? I wouldn't be going full bore into energy. Right. Like no one wants to show energy stocks versus this. Is a perfect thing. But for the earnings here, I'm kind of like it's 50-50. But I like the setup in general.
Yeah. I mean, like I said, I'm not a big, I got to play this. I got to play the earnings announcement, kind of trader. I usually like to see what the reaction is. But even so, if this doesn't have a big move after earnings, I think that's even more bullish if it can then
I agree with
142.
That. Well, I kind of say this. I don't care what move it has after earnings. I think it should I would buy it after earnings. Like I kind of don't care what it does. Does that make sense?
That's totally fair. Yeah, I like that too. Yeah, there's people
Yeah.
commenting like numbers are bad. Hey, I don't care if numbers are bad if stock go up. Numbers bad, stock go up. That's a fine combination for me too. So
No, exactly. I mean, and that might even be better, right?
yeah,
Is if it beats numbers, nice. You know what the perfect world is? It beats numbers, but doesn't gap higher, just kind of trades smoothly up 5%. Boom, game on.
yeah, yeah,
You know,
yeah, definitely.
that's the perfect report.
Yeah, I mean, I would like that a lot more than this blow off top we got from the
Well,
last earnings
which
report.
by the way, it still hasn't, it's consolidated it off.
Yeah,
So that blow off top signified the top in the stock because it's still consolidating off of that blow off top from 4 months ago.
yeah,
So, yeah, I would prefer not to see a gap up for this stock.
sure.
And let me say something about that. You kind of future performance, the best indicator of future performance is past performance. Okay. I know that the money management industry, who I don't know what their purpose is other than to collect fees for themselves, says, oh, no, you can't use past performance. No, it's the opposite. And so some stocks break out and then build off of breakouts, and they do it multiple times. That says to me, if that stock breaks out, it's got a chance to build off the breakout. Some stocks don't. This one hasn't. So on a big spike off of earnings, if it's too big, I would be like, it's probably where I'm the least excited. I don't think they're going to miss earnings majorly. They weren't missing earnings. They just had noisy numbers. But yeah, but it's a very interesting one. I like your thought process.
Yeah. And I feel like there's going to be a bunch like this that are setting up. And right now I'm just accumulating names. Like Roblox or like Reddit or like, a bunch of these other ones that are out there that were really popular at the beginning of the year and that have chilled out for a little bit and have the potential to, really start moving again. But speaking of things that could move again, it feels like crypto is getting at that spot where it's like it's going to go here or something's going to happen. Over the weekend, really constructive action in Bitcoin and Ethereum. I don't know if we really have too much to say on this other than I think it's the same thing we've been talking about for the past couple weeks. And you guys know that I'm really bullish Ethereum. Enrique, have your thoughts changed about this? Are you still on the crypto train here?
I mean, if anything, what one would say, pull up Ethereum. These things have done a good job of holding around their moving averages.
Yeah.
Both Bitcoin and Ethereum. So I think that's very positive that they've held these moving averages. Again, during a period of consolidation, take the chart a little bit further back.
Sure.
It's a natural period of consolidation. I mean, one would have looked back in October, but I'm going to tell you, so let's go to this next subject too, because it'll be built into it. The fall in Bitcoin, because I was doing this the other day, yesterday with Sean Ring, called me from Italy. The decline in Bitcoin and Ethereum exactly coincided with the parabolic move in gold and silver. It began on August 22nd because I was looking. He pulled me up GDXJ, the junior VanEck junior miners.
Yeah,
I don't. Do you know that one? I didn't know it.
Yeah.
Okay, so look at the date there. August 22nd. Go to August 22nd. You can see it on the chart. Go back a little bit. Keep on going. See that
August
little
22nd, or that's right
August
here.
Okay. Yeah. It's where it broke out.
Yep.
So maybe it's a little, but when you look at all the cryptos, when they started to really struggle, it was on this date because all the gold miners, basically, I think the momentum bid in crypto moved over to gold and silver.
Yes.
And now what's happened? And so let's just talk about gold for a second. I know a lot of folks have done very well with the miners, and it's very important we talk about it. I'm gonna just explain this so simply. I think gold goes to 10,000 in 2 to 10 years. Okay. I think the miners likely go up a lot when gold does that. Double, triple, quintuple, that GDXJ, whatever, goes up 100, 300%. The problem that we had was we were so extended. Gold, going back in its entire history that we have liquid prices for, was the most extended that it had ever been in terms of RSI.
That was up here.
And what I said is, people hear me say this. There's two things to watch for. There's price and time. Okay. The first thing on price, it's going back to the 50-day moving average. You guys, if you've listened to me, I'm a broken record. That 50-day moving average is whatever at 38.50 or something like that. You know, we're quickly getting there. What's more is when it gets to that 50-day moving average, when you're coming in, this is kind of what I was saying with what we were looking at earlier, where I said, USAR.
Yeah.
I don't think it tends to consolidate around the 50-day moving average. It tends to break through because it wants to do more pain. So that's price. The other side is time. This move, the reason I knew that August 22nd date, I guess it's really the other, what's that little white bar there? Was that August 20?
This guy right here.
September 2nd. Okay, September 2nd.
Yeah.
So that was 7 weeks ago. My view is any consolidation, when you take the breakout extension period from the 50-day moving average, any consolidation has to go at least 50% of the period of extension, and more likely 2 to 3 times as long as that. So you can't solve everything with price, because what happens is, even when price goes there, because all these people moved in and bought. The problem is, if price breaks quickly, you could say, well, it's back at the price, but those people haven't sold yet.
Yeah.
And now each day that goes by, all the people that bought above 4,000, everyone who bought above 4,000 sitting on losses. And a lot of people weren't buying gold because of debasement. They were buying gold because gold just gold's going up every day. You can't lose on gold. You can't lose money. I'm making money. All my friends bought gold. They're up a lot. And now they're down 20%, 10%, whatever it is, more on levered plays. And they're like, oh, I'm not making money. You know what? I'm out. And as we shake that tree, it's like I'm here. I'm waiting for. There's going to be a storm on Thursday, and it'll knock all the leaves off the trees. Right? That's what happens. I never knew any of this. I lived in a city, so we didn't have enough trees. But you wait over. My girlfriend's flying back, and I said, "Oh, you're going to get leaves." And I was like, "Oh, darn, it's coming back on Thursday." She was very angry with me because she's going to miss the leaves. But my point is that you have to shake it out through time. It doesn't happen quickly. So what does all that mean? All right, I'm going to bring it to gold, back to Bitcoin, et cetera, because I think a lot of you own miners and things like that. I think gold's great. I think gold stocks and all these stocks double, triple, quintuple in the next 5 years. I think if you buy stuff today, you're going to lose money in the next 2 to 10 weeks, and it's going to be very frustrating, and you're going to miss out on a lot of opportunities. And what I'll tell you, I'm 100% confident of, I do not think gold stocks and gold is going to outperform other speculative areas of the markets in these last 2 months. Right. So there's real opportunity cost. And you also have to ask yourself, if you lose 10% in it, 15% from here, not only did you give up the opportunity to make money elsewhere, but you're going to have a 10, 15% loss, so you're really going to stick with it. But after 6 weeks, right around year end, and we're consolidating along those moving averages, I think there's a beautiful spot to buy gold. So this happened differently than the one in July, where we were kind of making the same calls, but we're back to the same spot. I just think right now the problem is, I think people get so excited, and I don't blame it, because it's a big story. It's going to go up a ton in the future, but just be patient. Just relax and just wait. Remember, it's both price and time. And if you disrespect time, it will come back and hit you in the face.
Yeah, I think I said this last week, but I put gold miners on my list of things to revisit maybe in Q1.
Okay. Yeah, no, I think that's great. That is absolutely spectacular advice.
Yeah, because like you said, end of the year, we want to be in the best possible trades, obviously. We're talking about trades, not investments here. And it would be criminal to be trying to, pick these names in the hope for some sort of small bounce when there's all this other stuff out there that's potential to go up a whole lot more.
Well, there's an old Wall Street saying, I'll use the clean version of it. The market's most likely to do whatever will F the most investors. And, what would F a lot of investors right now is gold, and gold miners and everything are down 10, 15%. and other speculative stuff goes up 50. That would just not because people are short it, but it would just be it's the double whammy. So yeah, take a break off of your gold stocks. It's like you were training for a marathon, you ran the marathon.
Did
you
great.
know what?
You did great. You won.
You did great. You crushed it. You crushed it. My best marathon was a 3:30. You did a 3:30. Which is good for a old fat guy. But just relax for a bit. Just go walk it. For 6 weeks, and then start thinking about the next marathon.
Right. Totally. Some breaking news coming across through chat. Nvidia taking a stake in Nokia, $1 billion investment in Nokia, and they halted Nokia and it's trading again.
Well, I'm sure the U.S. government is next.
Whoa.
I joke.
Look at that.
Yeah. It's funny. Let's go back to something we were talking about before. I think that this melt up, whatever it looks like, and again, here's the thing, folks. I'm saying we're particularly positioned for a melt up in the next 2 months, but I think we're positioned for a melt up in the next 14 months is kind of my personal, right. I think what's going to be different about this one are this cross investment, the U.S. government taking stakes, NVIDIA taking stakes, OpenAI trading monopoly money for huge deals,
Right.
And that's being probably rude to monopoly money, in all fairness.
Yeah.
But I think that's what you're going to see. And I think that's what's going to get people frothed up. But the messed up part of it, which is why it is a melt up that turns into a bubble, is that none of the OpenAI money comes to pass. The U.S. government money comes, but it doesn't really change the economics of it. And when, once we get overbilled, NVIDIA's earnings get cut in half. And so they're still going to put out the money. But for now, let's rock. I mean, what's the short interest on Nokia? But I think it's going to be the characteristic. There's no shortage to that. I think it's going to be the characteristic of this bull period. So, there was one thing. So go back to USAR. Last week, there was an announcement from this. There's a $5 billion critical minerals investment fund.
Oh, right.
That is being put together with the Abu Dhabi and Orion. It's a company called Orion, the U.S. government, and Abu Dhabi are putting in $5 billion to make investments in critical minerals. That's all going to pop off in the first half of next year. And I think that's why all these rare earths like companies and these critical minerals companies, I think are going to have a great first quarter or first half, is because of that. I think they can still take a little bit of a break. But this is going to be what's different. NVIDIA taking stakes, again, OpenAI, but like whatever. That's like pets.com going out and buying stakes and things, which probably would have worked in 99.
Yeah. Well, I mean, I think it's good that you mentioned stuff like that, though, because it's important to mentally prepare for the crazy and the crazy reactions. And there's going to be, a lot of people trying to talk about common sense in a market that doesn't want to hear anything about common sense. And you kind of have to shut all that stuff out and go with the flow, and trading these things, because I'm already starting to see, a lot of pushback against some of the action we're seeing, and like a lot of people saying that all these quantum stocks are zeros. Yeah, Enrique's talked about how these quantum stocks are most likely zeros in 5 years, but these are rocking trading vehicles right now, and if you have a short-term time frame in mind and you're trading breakouts in these responsibly, you can make a lot of money in them, and it really doesn't matter.
Yeah, absolutely. And you know what I'm trying to do here? I'm sorry. Okay, here it is. What I was trying to bring up, the version of this that happened last time, there was a company called CMGI. Okay. I'm a bit older than you, Gunnar, and I've been doing this a bit longer.
Yeah.
CMGI was a publicly traded company. It was during the internet bubble, was known for it was an internet venture fund company. and they went out and bought Lycos, GeoCities, which I don't know if you remember what GeoCities was.
Of course,
Some people
I
on
remember.
this,
I had a GeoCities. Come on.
yeah, yeah. But CMGI was this publicly traded investment fund. Wasn't really an investment fund. It was kind of, I don't want to get into it. Like, it was just something, it wasn't a scam either. They just went out and bought all these crazy stakes. And I just feel like people forget that. We haven't had anything like that. I mean, SoftBank stock maybe a little bit. I think that the government and NVIDIA are going to, and everyone's going to, well, this time it's more sustainable because the US government and NVIDIA, they're not going anywhere. No, it's just a different flavor of the same ice cream. Yeah, I think that's really, really interesting. Bring it on. NVIDIA, take a stake in Talon. Hey, come on, we'll take it.
I forgot about Lycos. That was a good one. That was a really good...
Talon's more useful with their nuke than Nokia is with their friggin' flip phones or whatever the hell Nokia has anymore. I don't even know. I know what Nokia has. They got telecom patents and technologies. But.
I say bring back Lycos. That was a good search engine for a hot
Lycos second. And Excite. It was an Excite. There was another one that began with an E. Hold on a second here. We're going back. Alta Vista. Keys, Lycos.
Dogpile. Remember Dogpile, which gave you all of them? It was like an aggregator.
Oh, Excite. There was one called Excite. There you go. I do not remember Dogpile. That was. No. Anyways, I'll bring it back. I love this news. This is exactly what we're arguing for. Like, does that deal really do anything for Nokia? Probably not, to be honest. Does it really do anything for NVIDIA? Probably not, to be honest. Yeah. But it sure as heck gets the froth going. It sure as heck turns it up one more degree towards boiling. And let's trade it. Let's find the next Nokia. Yeah.
Yeah, why not? I've written down a couple of tickers that have been coming in.
Can I tell you though? I want to just do this off quick top of my head. Yeah. Who I think has Nokia type potential.
Okay, let's go. This is what people want.
I don't know that it'll trade up this much, and the stock's already had a good run, especially the last couple of days. But if you wanted to take one stock that I think could just go ballistic, I'm literally just thinking of this. IBM.
I've heard of it.
They're the leader in quantum. They've been doing AI since the 1970s.
Yeah.
They are of the companies. What companies own the most patents on Earth? Let's put up what companies own the most patents. They're right up there. Okay. Samsung, State Grid Corporation, China, and IBM. So I think that that's one I could see, like, take government taking a stake, NVIDIA taking a stake, someone buying the whole thing. It's $300 billion. There's a bunch of stuff you don't like, wouldn't like in there. But anyways, I just throwing that out. Like Chris Cimarelli had a really good call on IBM last year. Mm-hmm. We've traded a couple times, and I think this one's gonna sneak up on people.
Yeah, people forget AI is nothing new.
No, AI is just whatchamacallit, is just more advanced computing.
Yeah.
So,
but I love this earnings candle.
Well, that was also the quantum stuff. Like, that's what I get a kick out of all the quantum things, is like they literally don't have anything. Like they've got $15 million, $100 million of revenue, if that. Yeah. Meanwhile, Google has spent their combined market cap. Google spent 20 times their revenue in the last 5 years on quantum, just on quantum, and IBM's only been doing it for 50 years. So guess what? Qubits ain't going to beat Google and IBM. I might be wrong, but history tells me I'm not.
Yeah, I'm on your side on that one right there. And I wish somebody had spoken more bullishly about Google on these calls over the past 6 months, because it's up like 65%. Enrique has been pounding the table on Google for a while, for those of you who are new to the call or just joining us. And what an incredible chart too. I think IBM looks great as well. Big boys looking good.
I think IBM could surprise. I wouldn't be surprised to see IBM be a 500 million, 600. IBM can double, and you've got, I bet you the stock, it's not trading cheap, but I don't know, 25 times earnings.
It feels like cheap in today's market.
Yeah, although I paused for a little bit, because that's, the market's not that crazy expensive.
It's really,
but I think I think the problem, and maybe I'll touch on this in a matter. The problem we're going to have with the market is not the P, it's the E. That eventually, I think, when the AI stuff levels off, the E for a lot of companies just gets hammered. So, but that ain't the next 2 months, folks.
Those sound like 2026 problems. We'll worry about that.
Yeah, I'm not even sure it's first half of 26. We got time.
We'll talk about it late summer, maybe. So talk about those earnings, see where they're going. Let's see, a couple tickers that came in that I wrote down that people are asking about. HIMS, that's a blast from the past right there. I think this is kind of like, there's an old line I got on the chart right there. I mean, I really like how this is building, and this was a crazy popular trading stock in late 2024 and early 2025, and then it got wild. It got all the way down to $25, then came all the way back to 65 and has been bouncing around.
I like this chart. Shameless plug here. I don't know how many of you all are subscribers to the Paradigm Mastermind group. I mean, while they make a well circle, people are. I have a stock that I'm going to walk through today in 2-3 hours that has a $300 million market cap. Pull up HIMS, what their market cap is. And
10 bill.
And has the opportunity to be HIMS.
Nice.
And it's an awesome idea, under the radar. No analysts cover it. Like, it's just going to blow people away. And I think this thing could, there's been reasons why I think the stock could double, triple in the next 6 months. Plus once people learn about what's going on, I think I could be up 50% before year end. Paradigm Mastermind group, and again, all the Omega people are on there too. Ooh. And I don't know how to sign up for Paradigm. It's someone on the chat or something like that. They'll tell you how.
Good teaser right there. I like it. I'm gonna have to tune into that one. Let's see.
It's legit. Not that all my ideas aren't legit. You should pay. It's a good one, Gunnar.
I like it. Yeah, absolutely. But I like this chart too. And right down here, kind of riding its 200-day. I don't know if I would buy it here necessarily, especially not ahead of earnings. But it's an interesting look. And I think this is one of those stocks, again, where you have that muscle memory of this has been a big runner in the past.
It is. It's got crazy earnings history, like last quarter, they beat by 40, 50, they beat earnings by 50%. The stock was down 12. Quarter before they missed by 10%. The stock was up 18. It's Roblox on steroids, right? Yeah. It's like, I like the overall sort of intermediate term. I don't love it into earnings. It's just it's just too volatile with not enough. The data doesn't really support anything.
Yeah, that's fair. That's totally fair. I would definitely want to see a reaction before jumping into something like this. Okay, here's an important question in the chat. And Enrique, you're more of a baseball expert than me. I'm more of a casual fan. When can we tokenize Ohtani's future? Brian Slocum wants to know.
Kalshi or one of these prediction markets, I'm sure you can play it somehow. I mean, this is all part of our journey to idiocracy, by the way, which I don't know if you all know the Mike Judge film. Soon there'll be open betting markets on what color shirt is Gunnar going to wear, on the top trades call. But I don't care. I'll trade it. I know I'll make money. So
I wear the same thing all the time, so that's going to be an easy way to.
Me too. I'm usually wearing a Maverick shirt.
Yeah, that's a good point. Yeah, you always dress in dark colors, so yeah, that would be tough. That would be a tough betting market for us. I think we would lose on that one if we started facilitating it. Let's see. Is there any closing remarks you have for us? Because we're coming on the end. We got like 45 seconds here.
Let's rock. Like this is if you guys pay attention, and I'm not saying you don't, it's hard to watch all these calls.
Yeah,
we've been very cautious for the last 2 months, and it's not that we haven't been out there in the Maverick. We've been making money and booked a bunch of winners. Booked a winner in IBM. And we've had some stuff that struggled too, but it's still doing well. I'm not cautious anymore. Not for these next 2 months. Gun it.
Yeah.
Like I never actually thought of that with your name, but you should get hats that say "gun it." Mine will say "plan the trade the plan." Yours say "gun it." But so look, I'm not saying be an idiot, right? I'm saying prudent, tactical, thoughtful speculation.
Love it.
Is what I would employ, and I think this is one of the best setups. Last time I felt this good was actually in second half 2020. And I'll just give you this one thing. Second half 2020, I basically said we're going to see the largest economic growth we will see in my lifetime is going to happen in the next 4 or 6 quarters. Why? Because everything was shut down.
Yeah.
You know, I feel that about these 2 months. I feel as strongly as I did then, and it ripped. And so we're gonna gun it.
All right, let's do it. I love it. Thanks for coming on the call again this week, Enrique, and we will see you next time on Top Trades. Take it easy, everybody.
Thanks, everyone.